Let the chaos reign. Chaos8Reign presents Insurances. Are you protected? With special guest, the Blue Blazer. Broadcast January the 31st, 2021. Get your pen and paper and enjoy.
The views expressed on Talk Real Solutions, hosted by Tyrone Thompson at TalkRealSolutions.com, are the views of Tyrone Thompson and do not reflect the views of TalkRealSolutions.com, YouTube, or etc. The content here belongs to Talk Real Solutions and its many contributors. Views and opinions expressed by all contributors belong to them and not TalkRealSolutions.com or Tyrone Thompson, the host, or etc. All data and information provided on the site is for informational purposes only. Talk Real Solutions makes no representations as to accuracy, completeness, correctness, suitability, or validity of any information on this site and will not be liable for any errors, omissions, or delays in this information or any losses, injuries, or damages arising from its display or use. All information is provided on an as-is basis.
Okay. In a world where there's crime, corruption, violence, murder, rape, theft, and all forms of atrocity that plague the world in which we live in today, what you're witnessing we are living in a state of chaos, and it'll take much greater extreme chaos to restore the order in which the world we live in today. Good evening, Black people. This is Chaos8Reign here. And tonight, this is going to be a very unique. Before I start the show, I'd like everybody to go to talkrealsolutions.com. There you'll find the 3-point plan for Black empowerment, Black achievement. Also, on the website, you'll find a list of Black established-owned banks. Each bank that's located here in America. We also have the latest news articles, etc. that how can I say it? That shows and presents what's going on out here in the news. And that's pretty much it that's on the website. I'm not sure if anybody has ever seen the website or known about it. It's pretty helpful at this point. And if you'd like to donate to see any more of a growth on T.R.S, it'd be appreciated. So check the website for yourself, see if you like it, throw some pennies or ducks into it. Also, this show is being broadcast on YouTube, on Facebook, the same name, Talk Real Solutions. You catch this broadcast and many other broadcasts on both simulcasting on Facebook and YouTube. I think that's pretty much it. So, and also subscribe to Chaos8Reign channel as well. You'll find that I have a bunch of episodes as well. I have also podcasts, Anchor, Google, Spotify, you name it. I'm pretty much all over the place, as y'all could tell. So, you can find me, my episodes. Also, I am also on Twitter as well. So if you're not familiar with me on Twitter, I will be more active on Twitter. So like I said before, you can find me on Twitter, and also I'm on Facebook. I go by the name Erick Reign, so check me out on Facebook. So, I'm all around the place. So, like I said, season 1 and season 2 is slowly going to be moved to the podcast side of things. So, be on the lookout on Anchor, Google, Google Play, Spotify, Breaker, Mixer, etc. So, I left out and did all of the introductions, But no further ado, let's begin and deal with the topic at hand. So let me pull up and give you tonight's stream. Oh, wrong chain. Sorry about that. Exit. Enough. Make sure pull up 2 times. Tonight's subject, it is titled Chaos8Reign presents Insurance. Are you protected? And this is featuring for the very first time on Talk Real Solutions, the one and only Blue Blazer. So, as I open up the mic, Blue Blazer, a.k.a. Alonzo Hall, give your well welcome applause. Okay. Welcome, Alonzo Hall, to the show.
Good.
Can you hear me?
Yes, I hear you.
Okay.
Good evening.
Wonderful. Good evening. Good evening to you, sir. Good evening.
Thank you for being a gracious host and allowing me to spread my message on your platforms. I definitely appreciate that, and thank you for putting me in front of your audience. One question
No doubt.
I had.
No doubt.
Did you get the email that I just sent to you?
Yes, I've seen the email. But before we go into and delve into this discussion at hand, I like everybody that comes to this house and they take their sneakers or shoes off and kick back. I like to take a step back in a moment of time before we jump into what we call the present and eventually go onward to the future. So tell everybody that's listening for the first time a little bit about yourself, Blue Blazer.
Wonderful. You know, I'm an Aries. I love long walks to the bank. Now, let me stop. The main important thing, so I was that young dude who fell victim to what a lot of other young black men fall victim to, which is thinking that we need to be, 50 Cent or whomever the latest entertainer is. 2008, 3 days before Mother's Day, I became 25 Cent by getting shot 5 times in front of my mother in Winston-Salem, North Carolina, which they call the Trey 4. And I was out there being a, wannabe thug, wearing bandanas and gangbanging and all this. And there were some more thugs who had guns. And so one night, like I said, 3 days before Mother's Day, they shot me 5 times and tried to rob me. I walked out of the hospital under my own power after 14 hours. And, I got hit I got grazed in my ear, grazed on my head, penetrated my shoulder, penetrated my back, and grazed my left elbow. From there, I felt like Superman because I survived. You'll hear Tupac who will say, 5 shots couldn't stop me. I took it and smiled. Or they wonder how I lived through 5 shots. People are hard to kill on my block. So this is the mentality that I held. However, moving forward, I moved to New York City. I was working at Macy's Herald Square, and I saw a commercial for Aflac that said if you want to help people and make money, then insurance is the field for you. So I stepped into that field in 2011, and I've not looked back since. It's a lucrative field. It's a great field if you want to be self-employed, if you want to do your own thing and have no boss. It's a great field to be in. Now I do work for a firm, but in terms of my boss, yes, the owner of the firm would be quote-unquote my boss. But in terms of what I do, I am my boss. I work on what's called 100% commission. So my boss can't tell me, hey, I need you to be here at 8 a.m. or I don't care what you need, sir. I work for me. You just happen to be the company that I use. So that's the beauty there. And I think it's a lucrative field to get into. Now, not only do I have my life, health, and accidental, which means that I can help you with your life insurance, your long-term care insurance, your disability insurance, which is Paycheck Protector, your regular health insurance, but I can also help you with things like your Section 529 college savings plan for your child, or your 401k for your own retirement, or an IRA for your own retirement. But again, it's like going to McDonald's. So when you go to a licensed life insurance agent and they say, I sell life insurance, they're not telling you all the other things they have. Just like when you go to McDonald's, they say we have a Big Mac and French fries, but then when you go in and you look at McDonald's and you look at the menu, they have chicken nuggets, chicken tenders, milkshakes, sodas, orange juice, salads, all these other things that you wouldn't think of unless you actually go there. Does that make sense?
Yes, it does. It makes a lot of sense.
Okay. So now, before I did get started, because one of the most important things that I want to talk to you guys about is coverage. And then one of the most important things that gets fed to mainstream America, which is buy term and invest the rest. So before I go there, though, I do want to take a look at a couple of things. So one is the email that I sent you. I'm not going to look at that
it now.
Okay.
Okay, go ahead.
So if you'll notice, like, for example, the first one says Bank of America. You please share this with your audience because they won't understand it unless they see it.
Is this a PDF, right? I think I can share it in the chat room.
Yeah, this is a PDF.
All right, so let me back up because I was looking at it first. So let me exit and let me see if I could download it and put it right now for people to look at. All right, you continue. And,
so
and as you continue, I haven't talked with the other dude if he uploaded yet. So go on as I work my other end.
No problem. So as we look here, we look at, accrued interest receivable, net deferred tax assets, interest-only strips receivable. And that says not in the form of the security, so not in the form of the stock. Then number 4, it says equity investments without readily determinable fair value. So that's basically equity assets that haven't been sold. And if you'll notice, that number there is $6.1 million. But then if you look at, and this is just for Bank of America, if you'll notice their life insurance assets, it says A, general account life insurance asset. And then you scroll to the right and you see $2.9 million. And then you look at B and it says separate account life insurance assets. And you look to the right and it says $19,427,000. Right? So if you look at the top, all their investments are a little over $10 million. But they have one holding in life insurance, which is almost double that, almost $20 million. So what's so hot about cash value life insurance that the banks aren't telling the average person about it? Now, if this was just one bank, I'd be fine, but these are your major banks, right? This is the first one, and this is a little old. It's from 2019. But the first one says Bank of America. The next one says Citibank. Now, Citibank is in bed with Prime America, which is why they don't have as huge cash value holdings. So you'll see here they've got one in their main assets of $22,000, but then they've got $5.2 million. Now, they've got more in their investments with $5.9 million, but that's because Citibank sold off a lot of their life insurance holdings. J.P. Morgan Chase, a lot of people are familiar with Chase Bank. They've got about $13 million in equity assets or the stock. They've got $6.1 million. In a general account life insurance asset, they've got $6.1 million. And then in a separate account life insurance, they've got $5.38 million, almost $11 million versus $6 million. Wells Fargo, they've got in their stocks $5.385 million. But in their first general account life insurance, they've got $5.315 million. In their separate account, they've got $12.9 million. And in their hybrid, they have $614,000. I say all that to say, again,
Alonzo, one question.
Yeah.
As you talk, I'm using my other phone to listen in. I'll be away from the mic for like 5 minutes. So if you continue, if you hear me speak, I'm away. So that when you hear me, I'm back. All right, so continue.
Not
a disclaimer.
So now the next thing that we want to touch, and the reason I want to touch the next thing. So the first thing was the billions of dollars in the stock market versus the billions of dollars in life insurance. And there's a reason that there's only $3 billion in the stock market, but $22.5 billion in life insurance. So I want to speak to, and again, I'm going to get to the point of buy term and invest the rest shortly, but it's very important that you understand these things. So a article by Reuters will explain to you that the famed GameStop bull Roaring Kitty is a Massachusetts financial advisor. It's a 34-year-old dude from Massachusetts who recently worked at Mass Mutual Insurance. His name is Keith Patrick Gill, and he's the person behind the Roaring Kitty YouTube streams, which, along with a string of posts by the Reddit user Deep Effing Value, helped to attract the flood of retail cash into GameStop, which burned those hedge funds who had bet against the company and roiling the broader market. Now, the reason that I mention that is because, again, financial advisors or life insurance agents like myself, we do get paid a pretty penny from the company. The difficulty is, in recent years, these companies have been screwing financial advisors with things like digital apps. So now when I come to you and I work on 100% commission, as opposed to you trusting me or trading your money with me, you go to an app. Now, this app doesn't have the same recourse. I explained that I was sued for $1 million a few years ago, and she won $410K out of court due to errors and omissions. However, Stash or Acorn or Stockpile or, many of the other apps, well, they don't have that issue. Number one, because you investing with them are not what's called an accredited investor. So a lot of people who go into investing, they don't. An accredited investor there's 3 tests. One is your annual income, if you're single or married. If you're single, your annual income needs to be at least $150,000, or technically $200,000, but $150,000 a year for the past 3 years, expecting to be at least that or more for the following year. The other test would be with your spouse, which would be you and your spouse at $300,000 or more for the prior 3 years and moving forward. The next test would be your net worth. So you need a net worth of $1 million or more, excluding owned real estate. So if you have a bunch of houses that equals up to millions of dollars in your net worth, that cannot be included in the Securities and Exchange Commission's test for your net worth to be what's called an accredited investor. So what is an accredited investor? Well, a lot of people were complaining that these apps would not allow them to go and buy more Gamestop or more than one share. Well, the reason is because you are not an accredited investor. So you do not have the risk tolerance to go ahead and invest. Let's say everybody put their money into GameStop, and then GameStop suddenly lost a boatload of money. Well, your average investor, the average investment is $10,711. Your average American cannot afford $10,711 going that fast. Therefore, they don't have the risk tolerance. Without the risk tolerance, you are not an investor. The other way to be an accredited investor is to actually own at least one share of corporate stock, okay, which is very difficult to do. So from there, now we want to look at, sure thing. I have doctors here. Like I said, guys, I am in the hospital. So I will be speaking as well as pausing to have the doctors do things. But one of the ways that you're looking at, like I said, so the other way you can be an accredited investor is to be a licensed financial professional such as myself. I don't have those net worths of, millions of dollars. And me and my wife don't make $300K a year. I wish we did, but we don't. So what occurs is because I'm a licensed financial advisor, I do get considered as an accredited investor. So now, let's take a look at a couple of things. Like I said, not only do I have my life, health, and accidental, I also have my property and casualty insurance license. So what that means is I can help you with things like your business insurance or medical malpractice, or I can help you with things like your business liability, your car insurance, your homeowner's insurance, your renter's insurance, event insurance. Shit, I can even insure your dog, okay? But, again, a lot of these things, you want to make sure that you have put the proper plan in place. So how do you get the proper plan? Well, you sit with an advisor, like myself, and you do what's called a fact-finding session. So there we help to identify and protect the lifestyle that you're working so hard for. We're going to go over different things like the money you make, your goals, your annual income, what do you have in your savings, what do you have in your investments, any IRAs you may have, any assets you may have, any liabilities you may have. So an asset would be that house that's $500,000, but the liability would be that mortgage that's $500,000. What that means is that you're $1 million underwater. Anybody who's purchased a house knows that you pay for the principal for the first 20 years. I'm sorry, you pay for the interest for the first 20 years and the principal in the last 10. You can pull out something called an amortization schedule, which will show you that. So now, when we're talking about being properly protected with insurances, number one, you need to have your stuff protected. So if you own your home, you need to have a homeowner's insurance policy. And there's different types of homeowner's insurance policy. Okay, there is a homeowner's insurance policy for the person who lives in the home. There's also a landlord's homeowner's insurance policy, which is very different and usually costs a lot less than a regular homeowner's insurance policy. So those people who own properties but don't live in them need to get a landlord's insurance policy, which is generally cheaper and it protects different things. Okay? Now, if you are a renter, you will need to have a renter's insurance policy. A good renter's insurance policy, on average, maybe $25,000 worth of coverage, is about $20 a month. It's really cheap. What that will do is that will protect your belongings. You see, your landlord has homeowner's insurance, so if the house burns down, everything that they own in that four walls is protected. But your stuff is not concerned with. What also happens is the Red Cross will come with some blankets and tell you to be on your way. But without renter's insurance, there's nowhere for you to go in a hotel. There's no debit card for you to be able to eat food. There's no way for you to get your socks, your underwear, your toothbrush, or your medicine recouped. So those are the things that a renter's insurance policy is good for.
Okay.
Go ahead. You have a question?
When you moved on, you did mention about the GameStop issue in regards to the trading. Mm-hmm. In detail, before we move on, I noticed a lot of people that made money or lost or weren't able to get into that play in regards to that stock, rather buying it because while it was affordable or shorting it, the stock. I'm not sure if that's the right word to say it. What is one thing that we are not really understanding about the exchange stock, the stock exchange, in other words, in regards how this thing really functions and works for the trader and the person that you are trying to buy and sell your stock?
Beautiful question. So number one, there's no one indice, right? The stock market isn't just the stock market, which is unfortunately what people think. So, for example, you have, here in New York, you have the NYSE, the New York Stock Exchange. You have the Dow Jones. You have the NASDAQ, right? But then you have smaller indices like the S&P 500, right? But then you also have things like the Chicago Stock Exchange. You have things like, the California Stock Exchange. So these are different indices. So your stockbroker may not have availability or access to certain stocks in certain areas. Okay? There's not just one stock market. Then you can also purchase not just the stock, but the indice itself. So you can purchase not just a stock, but you can purchase the Dow Jones. You can purchase the NASDAQ. You can purchase the NYSE. Now, these aren't easy things to purchase. These are like $20,000 a pop, But
wow,
purchase those.
But that's how much it costs to get in there for the first. Like to really get in, for even if you trying to do options trade, there's a certain set you got to have in your account to engage in, or just to do heavy more trades.
Are you talking about a margin account?
The state benchmark. Yeah, that and many more other types of trades. Like the safe venture, if you want to build your brokerage account, it should be no greater than $25,000. As much as especially if you're making any money. This is what I'm hearing. So if you want to add on to that, or just in general, in regards that for most people to understand, when you don't have money to really go into the markets, like most people that's got capital, then you're going to have to build your account up, depending on where you start off. And depending how effective you are in the stocks, trading and winning and taking some loss, your loss has to be very much a minimal than what you putting in, just to grow your account steadily if you're going the slow route. Now, if you making money like that and you have money to spend, then no matter how you go about it, you either it's going to be like a hit or miss, depending on how you go about, what they call it, buying the stock, when to sell, when to hold. There's an old saying with Warren Buffett, everybody goes by, if you're going to be buying any stock, you better be in it for more than a decade. If it's not, it don't make no sense you hold on to the stock, which Warren Buffett's analysis does hold weight to a lot of stocks that people have purchased for the last couple of decades, especially ones like I'm not sure if I can say blue chip stocks or anything that has potential, have grown substantially, especially in the technical field. So that I want to lay out. So you may continue. Sorry about that.
Definitely. So to speak to that, yes. So Warren Buffett will tell you the average rate of return over a 20-year period is only 10%, right? So what happens is we get people who get extremely excited because unfortunately most average people are not sophisticated investors. So, for example, Tesla. A lot of people were excited about Tesla trying to join the S&P 500, right? However, what if I told you that there's life insurance companies who have been paying consistent dividends for longer than 120 years, who have a policy that's already tied to the S&P 500. So they're not trying to get to the S&P 500 where Tesla's trying to get. Tesla's trying to get to where the life insurance company has been for 120 plus years. The only companies that have been paying dividends since before the Great Depression are life insurance companies. Through the Great Depression are life insurance companies. After the Great Depression are life insurance companies. During the market crash of 2008 are life insurance companies. So these companies have been paying dividends, which is something we want. Now, if you look at most of these companies, they'll tie you to something called an indexed universal life insurance. Okay? An indexed universal life insurance means, like I said, it's basically don't sue me for saying this because it's not exactly the most legal thing I'm going to say, but technically it's the upside of the stock market with none of the downside. What do I mean by that? Your premiums are going in there, and they're mirroring the S&P 500. So they're mirroring that stock market, that indices. Just like if you put into a mutual fund or an ETF on Acorn or Stash or any of those investment apps, they're mirroring the S&P 500, but they're volatile. They're not fixed, right? So what does fixed mean? So what fixed means is there is a little bit of a negative. There's a downside to the fixed. You might cap out. You're capped out at a ceiling. So if the stock market goes, Super Saiyan and goes through the roof at 20%, you may be capped at that 7%. But on the flip side, it's fixed because if the stock market does like 2008 and crashes, and everybody's 401ks and IRAs like they did last year with COVID, which is why in 2 months I did 122K, which is why those things are not fixed. So the index fee tied to the S&P will be maybe a floor of 4%. These are arbitrary numbers. I don't know what the exact number is as of today. The thing called the prime rate changes every Wednesday. So the Fed changes their rate. So the last time I looked, it was 6.4% was the capital growth, and 4.27% was the floor. Okay. Now, the importance of these interest rates. Even worst case scenario, a cash value life insurance policy, and this is why we're going to talk about buying term and investing the rest. A cash value life insurance policy will get you more percentage than even a money market account. What is a money market account? That's a high interest savings account. The highest interest savings account, I believe, is Santander Bank at 0.80% APR. What does that mean? That means if today, January 31st, 2021, you put $100 into that money market account, you would gain a total of 80 cents by January 22nd, 2022. Does that make sense? Now,
and that is a percentage jump of, what's that percentage? Like 2%? I'm just throwing that.
That's 0.8 APR, so 80/100ths of 1%. Right? So for every $100, you're going to get 80 cents, or 80/100ths of 1%. Now, on the flip side of that, and I like to underpromise and overdeliver. So I'm not even going to talk about the indexed universal life. I'm going to talk about a regular whole life cash value life insurance policy. It grows at, you're familiar with compound interest, like a credit card. It grows on the top of each other, either daily or monthly.
Yeah, I'm aware of that.
So life insurance grows at a compound interest rate monthly of 2%. So on that same scenario, people are, I want interest rate. I'm going to go to this bank and put in this thousands of dollars to get 80 cents off of my $100 a year. Or you put that same $100 into a life insurance policy January 31st, 2021. By February 28th, 2021, that $100 is now $102. Would you rather 80 cents a year or $2 a month?
Let me do the math. $2 a month for 12. That would be like
$24 a year.
I'd rather take the $2 a month. If the most out of my money, the better. To be fair and honest.
Yeah. Who would take that 80 cents per year over $2 a month? Nobody. But again, the banks are advertising it to you as, oh, go to these investments, go get these products because they sound cool. And then you talk to someone like me or Deep Effing Value, and we're like, bro, why are you wasting your money with these quasi-investments when you can get 2% a month for the life insurance policy? Who would, right? Now, we're going to go into, there are some financial professionals out there who claim to be financial gurus. One is Suze Orman. The other is Dave Ramsey. One thing that they do is they bash insurance agents and financial advisors because they explain to you our commission. Now, luckily, due to me working in the state of New York or being licensed in the state of New York, legally I have to tell every customer how I get paid anyway because we have a law called Regulation 187. So we are fiduciary. Okay, so as fiduciary, there's a lot of pressure on our back, right? So here's how that works. Suze Orman and Dave Ramsey, well, Suze Orman will be like, don't go get insurance from these guys. They get almost 90% commission. You can get up to 200% commission. The average in the industry, however, which she is lying about, is 50%. So what that means is that same scenario, you put in $100 a month, I get $50 a month. Right? It seems like, oh, well, why am I paying these people all that? Well, the $50 or the $600 I'm going to get off of you pales in comparison to the $250,000 or more that if you sit down with a financial professional like myself, you will be able to take from a life insurance policy. Not your next of kin who gets the death benefit, but you. Because the operative word in life insurance is life. Very different to car insurance. You see, car insurance is actually car accident insurance. It only kicks in when you have a car accident. If you don't have a car accident, you can't do anything with your car insurance. If you don't die, there's a lot you can do with your life insurance, depending on the type of policy you have. So now Dave Ramsey and Suze Orman will tell you, and many agents at a company that I'm not going to mention that starts with a P. Actually, there's a few companies that start with a P that I'm not going to mention because I don't want to defame those companies.
Okay.
However, and they could sue me, and I don't have the money to be sued by insurance judges. And right now, we're going super litigious in these past few years. So, look, I already got sued for $1 million and lost $410K. So I luckily I had insurance.
You can't afford to take more hits, man. As a black man out here, man, we don't got the money like that. Our pockets not big. We're not millionaires. Well, say I could take a few hits. You're getting there. You could about to get there, but not yet. Now, if you up there, maybe I'd say, fuck it. That's like pocket change. That's like allowance. I could throw a couple $1,000 here and there.
Yeah.
Anyway, go on.
Not right now. But so let's look at the theory of buy term and invest the rest. So it's a great theory. However, what they are doing to mainstream Americans is screwing them. Why? Because, again, most average Americans don't have the risk tolerance to invest the rest. When you buy a term policy, there's no cash value accumulating to it. So it's renting. You're literally just renting your life insurance. The bad part is this. They'll tell you it's called guaranteed renewable. So what that means is, Chaos, approximately how old are you right now?
I'm in my late 30s right now.
Okay.
Hopefully.
So we're just going to call you 40 for math's sake.
Yep.
Let's say at 40 you buy a 30-year term life insurance policy. You're like, well, look, I'm going to go ahead and do what Sue Zorman said and buy term and invest the rest. I'm going to buy a $1 million life insurance policy, which isn't enough. We'll talk about that as well. But I'm going to buy a $1 million life insurance policy, which is, let's say, the average income for American is $50,000 a year. So $1 million life insurance policy, and you have wife and kids, is 20 years of your income. Boom, that's good. I'm 40. If I die in 20 years, my wife's 60. She'll have till 80 of $50,000 a year, and my kids are grown. They don't really need anything. Thought. Right? Now, remember, I just told you about the interest-bearing account or the money market account. So how do you actually replace $50,000 of income a year? So, again, in our community, it's not taught to us properly. I actually, August 4th was at the Conference of African American Financial Professionals, and only 5% of licensed financial professionals are African American. So what happens is, and this bothers me, because the African Americans are not doing what they need to do. They're out here getting checks, but they're not teaching their own next of kin the proper way of how to build wealth. There's a guy who, if you're in financial services, the Kinder brothers, white guys, great guys. There's a guy by the name of David Kinder who explained and showed me a Yahoo article from Yahoo Finance that basically said financial advisors like him, who are Caucasian and in the what's called $1 Million Round Table, have an obligation to take financial advisors like myself, who are African American and headed to the $1 Million Round Table, under his wing. And the article says why. And the article explains because the majority of African Americans don't come from money. So me trying to explain this concept to a bunch of black folk, they don't get it. They'd rather buy Gucci though. Right? Or invest in the stock market because that's supposedly what's hot.
Yeah.
Now, Dave Ramsey will tell you buy term and invest the rest, like Sue Zorman. So again, now let's look at this $50,000 annual income that you want to replace for 20 years. The real way to do it is not to get a $1 million life insurance policy. The real way to do it is to get a $5 million life insurance policy and put that $5 million into that money market account, that bank account that I told you, that's going to get you the 0.8% interest. Because what's 1% of $5 million? $50,000. So now you live off of this $5 million and this interest, or this $50,000 a year interest, in perpetuity. You've now created a legacy for your family. Let's look at two investment companies. J.P. Morgan Chase Bank. Do you know that Morgan of Morgan Chase Bank is the grandfather of Morgan Stanley Smith Barney Dean Witter? He's the grandfather.
One thing I would say with a lot of the few rich family members, and I remember there was a book called The Rich and Super Rich. I wouldn't be surprised if they mentioned the Morgan family that started J.P. Morgan, that because they were in these major industries in the infant stage back in the 1800s, I believe, Alonzo Hall, that who inherited is the children, which on the average will be in the same field that made their once great-great-grandfather very rich follow suit. So if he's the grand,
makes sense.
It only makes sense because what your father established a century ago, he passed down for you to establish and maintain what we call wealth. actual web, because the banking industry, just anything you establish, is now corporatized. So with corporation, you are backed and funded and protected by the government.
Yeah.
So any bailouts, you get first dibs. And you don't get small money. You get money in the billions for not doing nothing. And I'd say people doing nothing. The government rewards people that are failing every year, and they give them what, Alonzo? More money. Mm-hmm. You know why? Because they are it's like this. It's like a good old boys club. Once you proven yourself and you pay your tithes, you are in. And mostly when you're in for life. Unless you do something out the ordinary, they will kick you out. And mind you, if they kick you out, then you are done.
Oh yeah.
That's all I want to say. I want people to let that sit in. So go on.
Yeah. So when we're looking at buying term and investing the rest, it's a great idea if you execute it properly. And for mainstream America, it's really possible. So let's look at the idea of buy term and invest the rest first for the wealthy, like Sue Zorman and Dave Ramsey. So Sue Zorman and Dave Ramsey will tell you to buy a term policy. Generally, they'll tell you buy that $5 million term, which is going to cost you, $3,000 a month anyway, and then invest the rest. Now, when they say invest the rest, they're telling you to put it in mutual funds or stocks or things like that. And they're telling you to do that with a financial advisor, such as themselves or such as myself. Now, here's why I really don't like to, especially when it comes to the African-American community, talk about investment. You're familiar with Jay Morrison. So he did something called the Tulsa Real Estate Fund. And then a bunch of African-Americans invested in it, their $500. And immediately when they did not become bazillionaires overnight, they now have him being studied and scrutinized by the FBI and the SEC, Security Exchange Commission. Now, everything that he's done is above board, but they're calling him a scam artist because he purchased a commercial property and did it for the Jay Morrison Fund. So everybody, well, how are we supposed to make our 8% off of that? Once COVID goes away and those commercial businesses go and purchase or do a lease with him, your average commercial lease is 5 years. So that's going to grow. Now, again, we're looking at those investments. So when you're doing an investment, there's a couple of fees that I, as a financial advisor, charge to you, my client. First is your net worth. So let's say your net worth is $100,000 and you purchase a mutual fund from me. Well, after I get the commission from the company on the mutual fund, I charge you a money management fee, which is called 2 and 20. So what does that mean? That means your net worth is $100,000 a year. Every year that you own this mutual fund that you purchased from me, even if we do not speak, you must legally pay me 2% of your net worth, or $2,000. Do you want to make it pay me $2,000 for no freaking reason?
I mean, I wouldn't, but just to be
but
fair,
many people go to the financial advisors or the stockbrokers for this.
Yeah.
Now,
$2,000 a month. Now, mind you, if I make
that's $2,000 a year. $2,000 a year.
Oh, $2,000 a year. Okay.
Yeah.
So that's like let's say if I have like a car insurance and I look at the average, depending what type of insurance I buy for one car, right? I look at it, and on the average, I'm not sure. I can only speak for myself. I'm paying less than $2,000 a whole year in car insurance. Now I can't. Most people nowadays probably spend more than that because the average person buys roughly either a new car or a car that's at least 2 to 3 years old.
Before we go into that, I want to teach you a trick. About your car insurance. Okay? Yeah. What are your limits of liability? Do you have state minimum 25, 50, 10, 50, 100? What are you at?
Where am I right now? I gotta pull it up. I can't give you an answer right now because when I purchased it, this is my.
Don't worry about it. The average person goes through state minimum 25, 50, 10, which is New York. I base it. I'm licensed in 5 states, but I base everything off of New York because it's a big number state. So 25, 50, 10. What does that mean? That means that you, Chaos, are making sure you and me are in 2 separate cars, and we're driving down the street opposite directions. I got 4 people in my car. You got 4 people in your car. We get into an accident. Boom. The 4 people in your car get injured. The 4 people in my car get injured. That 25-50 means that your insurance company, let's say State Farm, will pay up to $25,000 per person in my car, not your car, in my car for that accident.
Okay.
And a total of $50,000 for that accident, regardless of how many people are involved in my car in that accident. Again, they're not worried about your car. This is limits of liability. We're going to go through everything. Difference in full coverage and stuff as well. But limits of liability, so now let's say, because this happens with car insurance as well, people will say, well, you know, in your car insurance, you should always bundle a life policy, even if it's a small life policy. I recommend that as well. I always recommend getting your life insurance separate from your car insurance, but always bundle a car insurance with your car insurance. Why? Because right now you're driving around 25, 50, 10. So, and again, not you specifically, but I'm using you as an example. But now let's say all you have is, you know, liability only, which most people do once they own their vehicle. Well, now what you're doing, Chaos, is you're saying, I'm driving around 25, 50, 10. So I'm making sure that I'm driving around with $50,000 of life insurance from State Farm. God forbid I kill Alonzo in this car accident. But screw my family. I don't have any coverage on me. This is what people are doing. So if we're in this accident, let's say you and I, last night we're driving down the road, we got in this car accident, and you and I both died. Well, State Farm is going to give my wife $50,000. State Farm is going to give your wife nothing.
Wow.
That's kind of messed up, right?
Wow. I don't know why. It's hard to follow the logic, but damn. So your wife will get the money and my wife won't. Is that what I'm trying to follow, right?
Right, because it's limits of liability. So liability has nothing to do with you and yours. Your liability is the other people.
Okay.
Okay?
Okay.
So your liability is determined on if you hurt someone else. And then, like I said, 25, 50, 10. So 10 is property damage or $10,000 worth of property damage. So now the age-old question, everybody always asks, well, why does my price keep going up every 3 to 6 months? Well, here's why. The insurance company does not see you as what's called a responsible insured. You are not considered a responsible insured until you get limits of liability of 100, 300, or higher. So what that means is $100,000 per person, up to $100,000 per person in the accident, up to $300,000 for the entire accident. Let me explain to you why. Right? When I was in New York, I went to the emergency room for muscle spasm. They prescribed me one Motrin. If you're familiar with Richard Nixon and how he screwed the Hospital Indemnification Act, this is why it's important to have health insurance, because no hospital knows what price anything is. They just make it up out of their ass. So they charge. So
they could be jack up the price. They don't know what the exact price.
They do, and every hospital is different.
Wow!
So when I went to Kings County in Brooklyn, they charged me $1,000 for a Motrin. For one Motrin, $1,000. Wow! Right? And because I didn't have health insurance at the time, I had to pay $1,000 out of my own pocket for one Motrin.
One piece of Motrin, right?
One Motrin. One piece. Not a 2-pack.
Whoa.
One Motrin.
Are you serious?
So now if
damn.
So now imagine, Chaos, you and I got into a car accident. And let's say you bashed my car and I got injured. Well, I'm not paying those medical bills out of my pocket, so I'm going to sue you, right? Mm-hmm. So if you think a car accident, $25,000 ain't going to cover that if they charging $1,000 for a Motrin, right? Mm-hmm. So people are going around lesser covered and not responsible. Now, if you have up to $100,000 per person in that incident, and they're charging $1,000 for Motrin, they can give me 100 Motrins, which would be $100,000, and it'd still be taken care of. A total of $300,000 for that entire incident. Now, when you're also looking at, like, professionals like ourselves, people who want to own businesses and have things like houses and toys, you're underinsuring yourself getting the minimum insurance, because what happens is there's liability protection, right? Remember I told you that liability? Well, there's other liability too, right? So let's say your son is outside playing baseball. Pow, he hits a home run and goes into Miss Johnson's yard and breaks her window. Well, Miss Johnson is going to say, hey, Chaos, your son broke my window. You need to pay for that. Well, your homeowners or your car insurance will have something called vicarious liability. So they can actually take a claim on your car insurance or your homeowner's insurance, and you don't have to pay out of pocket for Miss Johnson's window. Okay? So those are some of those things. But, again, I want to get back to buying term and investing the rest. This ended up being longer than I intended because it's very in-depth, and I appreciate the questions. So, and if you do have users who have questions, please ask the questions. When it comes to investment.
Let me take a pause since people are listening. And like I said to most people, that this is not something that is going to wow you people that when y'all listen to this broadcast. This is some information that a lot of us as a community or any person generally in America don't really pay attention, ignore. And education is one of the keys that will make us better as a collective, as a whole. And like I said, bringing the Blue Blaze, a.k.a. Alonzo Hall here, is to further educate insurance, what to do, how to make the best out of it if you're going out your way to looking or try and apply for insurance. These are steps you need to take, what a difference, and, set you on your way. We do have one caller. I'm going to open the line, see if he has any questions. All right.
Sure.
Okay. First call, open up. May I ask who I'm speaking to?
What's going on, Gary?
What's good?
All right, man. Hey, I appreciate your guests and the information you bring. This ain't, this is deeper than even entertainment. This is important information. Everything don't gotta be, joking around or, getting at each other's neck. So I appreciate that. Two questions. How long is this GameStop thing going to go on? As far as this whole hype for the low investor, and what would you be suggesting down the line to invest in as far as stocks, bonds, and shit like that?
Beautiful question. So, number one, I have no clue how long this is going to last because investment is speculative. Right, is real speculative. So we don't even know what's going on right now because the SEC and FINRA are investigating, and they're going to decide, if they're going to open it up. For example, it's still open to institutional investors. It's just a regular guy like you and me who can't get in there because we're not accredited or institutional. It's like these hedge funds. These hedge funds are institutional investors, so they're still buying and selling like nothing. But in terms of for you and I wish I had a definitive know when it's going to stop. Bro, when's Jesus coming back? Like, I don't know.
At least you were honest about it. I mean,
yeah.
And so tapping into another question, like, do you see this happening again? How about that? Is the little guy now, is this open for the little guy to come in at some point? No?
No. It's not. This was a fluke. I do see it happening again, and I'll explain to you why. Because you have advisors like, the other gentleman, who we're getting screwed by these companies. Like I said, we get paid a pretty penny commission, but then they're creating, other things. Like, I'll give you an example. When I was with Mutual of Omaha, I sold a $25,000 final expense to a grandmother. And the reason why was because she had 21 grandkids. And she already had a $20,000, but I sold her the additional $5,000. Now, the corporation said, nope, you can't do that. We're taking your commission and we're selling her this additional $5,000 because you either got to sell them the whole 25 at once or not at all. Now, what that did was that took money out of my pocket. It also took her out of my pocket, meaning she wasn't going to now give me these 21 referrals. This is 21 people who may or may not have bought life insurance, but when it's coming from your grandmama, especially in the black community, you're going to listen. You know what I mean? So that would have been 21 people with whom I could have actually helped or made a difference on. You need something? Oh, no problem. Gentlemen, give me 1 second. I have the nurse in here. She's going to take my blood pressure,
no problem,
like I did
sir.
Don't worry about it. The call number for tonight's show.
That last question, caller, because you asked a specific question about what to invest in. Now, as a fiduciary, I'm going to be very, very careful there because I haven't done a risk tolerance with you. There's a lot of things that I haven't done with you. So I generally stray away from telling people specifically what to buy. However, there you go. I use an app called Stash. Yeah, I use an app called Stash. Here's what I would like you to look for, sector-wise.
You say the name again?
Stash.
Stash.
Okay.
Stash.
Cool.
It's like another investment stock, which is very good because you could put your money in any of the corporation that is available on the Stash account for less than $5 or more. You don't have to put in the whole to buy the stock.
You can start with like $5.
Yeah.
You can buy micro portions of the share. So basically you're buying ETFs and mutual funds, but the beauty is you can also actually, because of the way that the crowdfund works, you can also, let me uncross my legs, I just realized that, I'm sorry. You can also purchase entire shares of entire stock. So, for example, people were getting excited about Tesla. I own a boatload of Ford. When Ford started going down, I started. See, I take the short strategy. So, my strategy is shorting things. So I like when they go down, and I buy a ton more. So Ford was just at like $4, and I was just buying it up. Now it's up to like $7 and change. So I'm not
checking it out on Robinhood. Give me 1 second.
Yeah. There's another app called Stockpile that you can use. Okay. I recommend using all of these apps: Stockpile, Acorn, Robinhood, Stash, any of them. Okay. And the reason you want to use, I'm sorry, go ahead.
Finish what you're saying. I'm gonna tell you something. Go ahead.
So the reason you want to use all of these as a non-accredited investor is because you are going to the stock market to try and gain. Okay. Now, if you know anything about the stock market, just like Warren Buffett said, wealthy people go to the stock market for preservation of capital. So what does that mean? That means if you take $100K in 2021 and you put it in the stock market and let it sit there for 10 years because of the 3% inflation, that $100K would actually only have $50K worth of spending power in 2031, which is why you put your money in the stock market, so that $100K goes from $100K in 2021 to $100K in 2031. Does that make sense?
Right.
Okay. Now, the stocks that I recommend, like I said, I personally, and I say I personally because I don't know anyone else's risk tolerance or goals, but if you want to mirror some of the things that I personally invest in, by all means. I personally invest in Ford. I personally invest in marijuana stocks. Okay? Marijuana is going to explode. Okay?
Now, when you say that, are you talking about the actual growers, the companies, or you're talking about dispensaries or both?
Both dispensaries and companies. Okay.
The ones that manufacture or grow.
Yes.
Okay.
Okay. You're going to want to have both of those. The idea is to do what's called diversify, right? So you don't want to have all your eggs in one basket. The other thing I do recommend, and Chaos, actually, I'll share it with you, and you can share, is to use Stash. And the reason I use Stash is they have a few different things. So not only do they have your opportunity to invest, but they have a bank account. And the purpose of the Stash bank account, they have this program called Stock Back, which, again, for the average American is the perfect thing. So what is Stock Back? Well, when I take my Stash bank account, my Stash debit card, and I pay my cell phone bill with T-Mobile, which T-Mobile is, I think, $107.77 a share right now, and I own 2 shares. Every time I pay my cell phone bill to T-Mobile with my Stash card, it buys me like a small percentage of T-Mobile. So why wouldn't I, since I'm going to pay my phone bill, use an app that's going to purchase me stock in something that I use? So the idea, folks, is to also purchase stock in the things that you use. Now, one more thing I will tell you as a financial advisor that a lot of financial advisors tell you against, which is by making frivolous purchases. Or, for example, like the stimulus money we got. I saw a bunch of people paying bills, and I was like, that's not what the stimulus money is for. The stimulus money is for you to go do the stupid shit you've always believed in. When you want to go, buy your sneakers, to go stimulate the economy. It's not to pay bills. The stimulus money is to go and frivolously spend. Everybody's going to get it. Go buy a bunch of crap with it that you normally wouldn't. Do not pay your bills with it. Go buy random stuff with that stimulus money. Okay? But also financial advisors will tell you in terms of investing, like let's look at the African American community in Jordans. Everybody, don't go buy the Jordan. Just buy the Jordan.
Before you go on,
sorry?
Before you move on, I'm going to open the line, but before we move on, I want you to go in on this, is I looked at Ford stock right now on the Robinhood app. Right now it's selling for $10.
Yes, it went up even more.
Yeah,
so that means you got a $6 profit on it right now.
So I got a $6 increase. The only time you actually get a profit is when you actually sell. Before then, it's just an increase to your portfolio. Yeah, you don't get a profit or a loss until you sell.
Sell it.
So yeah, even if it goes down, you're at a loss, but you haven't. You don't acknowledge that loss until you sell. Okay.
Right.
And the reason I say that, a lot of people don't know. My wife does work directly for the Internal Revenue Service, so I have a inside scoop on a lot of that stuff too.
Oh, that's always good to know. I mean, or have somebody on the inside.
Listen, it's
all right.
It's great to know. Other callers?
Yeah, I'm gonna open the line, but let me open the line now before you continue. Let me see what this is.
Yeah, please.
All right. I open the line. Who else is calling? Who's this?
So this is Miss Lady. I've been listening about 15 minutes.
Okay.
Hi, what's your name, young man?
Well, my YouTube moniker is the Blue Blazer, but I go by, my actual name is Alonzo Hall, across all platforms.
So do you work for yourself, or because I missed the first part, or do you work for a company?
I work for you. I'm a broker. So what happens is most people don't understand the difference between a broker and an agent. So an agent works for the company, State Farm, MetLife, Bankers, New York Life, whoever. But they put the company's best interest at hand, meaning when they offer you products, they're putting the products company. If you don't like the products company, sorry. I work for you. So myself, but for you, meaning I'm going to sit down, we're going to identify and protect your lifestyle, and I'm going to say, well, this company offers this. This company offers that. This company offers this. which one do you want? Well, I like this one because it's cheaper, but it doesn't offer me the better policy, so I'll go with the expensive one. All right, and then we'll go with that. Or I don't like the expensive one because it doesn't give me as many bells and whistles. We'll go with the cheaper one. I don't care either way. I get paid commission from the company.
So you're an insurance broker?
Yeah, I'm a financial advisor or a financial consultant. I'm sorry, not advisor.
And you have your certification to be a financial advisor?
Yeah. All you really need is a life, health, and accidental. I've had all the others. I'm based out of New York, so I worked on 39 Broadway, was a stockbroker, across from the Brass Bowl. I got rid of all my licenses that can lose you money because people come and it sounds nice to work with somebody who's a stockbroker. But, again, when we're talking about 2 and 20 fees, I'm raping you. So first you buy – it sounds nice because you bought a financial product from me, but I'm charging you 2% of your net worth every year. If you make if your net worth is $100,000, you're paying me $2,000 a year for no reason other than you bought a mutual fund 10 years ago. Then there's the – like I said, the 2 and 20. So now that same mutual fund that you bought from me 10 years ago that you're paying $2,000 a year for no reason because I have these credentials that everybody's worried about, also afford you to pay me 20%.
Research, I'm sorry, people researching and buying their own mutual funds. They don't need a broker to tell them which one to buy. They're doing low-cost and no-cost mutual
funds.
Right,
they're doing mutual funds, but you're not an accredited investor. So it's like dunking on a Nerf basketball hoop and saying you're dunking on LeBron. It's two totally different things.
Well, I think I'm going to disagree. I think this Wall Street bet. Wall
Street Bets was a life insurance agent for Mass Mutual. That's what I'm saying. That people like me had these licenses and got screwed over by these big companies who were screwing you over. So we're turning around and saying, you know what, I don't need these additional licenses that cost me money, that cost you money. Like I said, 2 and 20 fees, you're talking about mutual funds. You're not talking about investment. Investment is not a mutual fund. A mutual fund is something completely different than an investment.
You know what, you're assuming that I don't know anything. No, the way you coming, you're not really listening. You're talking a lot, but you're not really. Okay, so I just wanted to know if you had certifications, and now you're offering all this other stuff. It's not necessary, okay?
Well, now, I understand. The certifications, like I said.
No, I just want to know what your qualifications are in terms of being a financial advisor. That's what I wanted to know.
Do me a favor. Go to my website, and you can see all of our qualifications. It's cgwealth.financial. And that's
I'll put that in the chat room.
Okay.
I'll put that in the chat room.
Financial?
Yeah, and you can see all of my firm's qualifications. Okay. But the reason I'm speaking like this is because I don't want you to go and get screwed because a lot of people do this.
No, don't worry about that. We can move on from that, okay? I've been buying mutual funds for like years, decades. We can move on. Real estate too. We can move on, okay? Now, the one thing I wanted to say was that in terms of this app you gave, what was the name of it? Stock Stash or something?
So there's Stash, Stockpile, Acorn Investment. There's a multitude of them.
Okay, but the one you just mentioned, where you can get a small percentage of the company's, when you pay your bill, like, whatever, 0.01%, whatever it is. Okay, I was listening to someone today, and they were saying a lot of these platforms, like Robinhood, Coinbase is probably similar. Since it's not FDIC insured, it's not a bank, right? It's not a financial institution, that if they get into real financial trouble and declare bankruptcy, there goes your investments.
Who said this?
Oh, there's somebody I was listening to earlier today.
Okay, so what are their credentials?
And the signal came up because of all this Wall Street bet.
Right.
Robinhood had to get $1 billion infusion of cash.
Yes, I saw that.
To stay afloat. So I hadn't thought about that, to be honest, and it's something to be aware of. That these apps that people have created sounds great. Robinhood, there's no fees. You can buy your cryptocurrency or whatever. However,
I wouldn't recommend that. I would not recommend buying cryptocurrency from Robinhood. If you're going to go that route, go use Coinbase or another digital currency type application.
Yeah.
Not Robinhood.
Why do you say that?
Because Robinhood, from the issues they have now with the GameStop situation and beyond that, see, one famous lady, anything that is free with no commission is always a questionable thing. I have Robinhood, to let you know, but I only use it briefly. I don't really put everything on Robinhood, to be fair, because before I know about Robinhood, I had TD Ameritrade account. And my Robinhood is like another avenue to get people in the habit of trading without knowing the extra fees. That's what made their app popular. When this thing happened with the GameStop, and it's not just Robinhood, I know all other trade investors might have issue too, because one thing they did with GameStop stock and every other one that's on the ticker, that they had to sit there to shut the little man out because of what has happened. Because remember, people in the stock exchange and all stuff have been making money off the little man for some time now, and that some word got out that people start buy it quick. It ran Alonzo, the stock up, and when they know they cannot pay off these people, that's when the red flag happened. So what they do, they had to go beg the president to go back, change the rules with the SEC to start making it more hard for anybody to buy any stock.
Well,
that's not really in that. Yeah, go ahead.
You've heard of the pink sheet, so everybody's heard of Steve Madden, right?
No, I didn't know, but go on.
Okay, and Jordan Belfort. So Jordan Belfort basically manipulated the stock of Steve Madden to go up, but Steve Madden didn't really have the money. So when people were buying into it, the stock was going up, but it didn't have the holdings to really deal with what was going on, which is the same thing which is why Robinhood needed that 100 bill. Because they were like, whoa, there's too much infusion of cash going on here. People are going to start selling like crazy, kind of like with Bernie Madoff.
They're not going to meet the demand, Yeah.
We can't meet the demand because there's too much. FDIC insurance is only up to, I think, $250,000 or $100,000. So even if
it's $250, and most banks don't have $250 in the bank, so that's not even an issue for 95% of them.
Yeah, but it sounds like you're close to that $250, sis.
No, I'm not, but I'm working on it, okay? I'm not, trust me, I'm not. But the thing is, I'm not really worried about, I'm not really worried. But anyway, the thing, at least today, I don't know what tomorrow will bring. Anything can happen, right? So, but no. So anyway, because I wanted to go off to, I just wanted to put that out there about the bankruptcy thing. And I know there's a clearinghouse between Robinhood and the hedge fund, right?
I believe that's Stern AG. I believe it's a company called Stern AG.
And then the hedge fund, there's somebody called Citadel. I think that might
Citadel,
be.
That's it.
And then the hedge fund is it Melvin or something? I don't know what it is. But anyway, there's been a lot of political outcry how they stopped people being able to buy the GameStop and AMC and Nokia. They raised, I think they had 15 to 20 different companies because that you couldn't buy from, but you could sell. And can I ask a question? Because I don't know. I've never shorted stocks. I don't plan to.
Okay.
Is there a contract date when when the hedge fund or whoever decides I'm going to short this stock and I expect it to go down? That's how I'm going to generate revenue. Is there a date when that becomes due? Do you know what I'm saying?
Yes and no. Yes, if it's a stock option. No, if it's a regular stock. A regular stock, you can short for as long as you see fit. But when you're looking at a stock option or a call or a put, there are maturity dates.
Oh, yeah. I know I would never do options. I met someone years ago who came into work. I worked with her, actually. This was years ago, and she had been crying all weekend she lost over $10K in stock options, and I'm talking, this was probably like 20 years ago, so that was a lot of money. You know, it'd be a lot of money now. Anyway, so she was crying. She had been crying. Anyway, I would not do options ever. I'm not going to do that. Okay, and then thirdly, I want to just say, regarding that Motrin bill, they could have billed you $1 million for that pill. You can dispute that and not pay that. I've done it before.
Well, I haven't paid them already, so they done.
You really need to review. If you get any kind of bills, medical bills, hospital bills, you really need to go item by item and challenge anything that wasn't done or that was overbilled, and they will.
I didn't know you could do that.
Oh, yeah, I just did it not too long ago. I sure did. I'm like, oh, no, this is happening. You need to take this off, and they did.
Oh, gosh. Miss, you just saved me a bunch of money.
Oh, yeah. Oh, yeah.
Yeah.
Oh, yeah.
So, okay. My question was, I can't now because we went all over the place.
I'm sorry.
So that's about it. I can't think right now. I'm done.
No problem.
But I'll get your website. And, I know everybody's situation is different. And, no, I don't have $250,000 in my bank account. Let me put that out there. Okay.
Well, it would be nice to have that. Wouldn't it be, Miss Lady? Well, it would be nice to have that money in your bank sitting nice. So, I got $250K in my bank, sweetie. I ain't going to touch that. I'm going to let that sit right there. You're not going to spend
you must no.
Paying off your bills. I think that was the wrong message. I mean, if you got bills and you get some money, you should pay those bills off to increase your credit score. And you do
You're
need
talking about with the economic stimulus?
Opportunities. Do you know what I'm saying? You have to have some cash to take advantage of potential opportunities.
Yeah.
And the better your credit score, the lower interest rate. What if you crash your car or whatever, or your car dies out on you? You have to go get another car. You'll get a much better interest rate having a higher credit score. So, yeah, pay off your bills. Don't make any, as much as you can. I mean,
no. I'm only talking about with the stimulus. Other than that stimulus.
I sure would pay off my bills with that stimulus check. Oh, yes, unless I'm going to invest it. I'm not going out buying no material goods that I don't need. I'm going to either invest that money or pay off my bills or
the
save
problem
it.
with that is that's what the wealthy are doing, which is why they're not trickling down money to us. So we have to, because the wealthy are hoarding their money.
They're not going to trickle. There's no trickle down. Did you ever believe trickle down?
Economics?
Reaganomics?
Reagan, well, you're probably too young, but Reagan started that trickle down foolishness.
Yeah.
It never trickles down, okay? And what does that even mean? What's trickling down? Pennies? If it happens, there's no trickle down. It's all hoard at the top. So it's all, benefit for the top, Yeah, so you really have to be so careful now. Another thing they're talking about, how the silver and gold market is manipulated.
Oh, yeah.
And allegedly.
Really?
Yes. And
God, that's the problem.
Buy you some physical silver. Gold is real now, but buy some physical silver. Yes. So I was looking at, because you can, hey, you never know when apocalypse comes, when everything gets shut down, including your internet. And so have you some, they talk, you don't have to buy silver eagles. They're expensive, but they have lesser coins, and they have you a little stash of silver coins and whatever. And don't buy sterling silver. That's the worst sterling silver to buy. Your grandmother's teapot set, the sterling silver, is not going to be worth much. So that's about it.
Okay. So actually, before you go, I'm going to push forward with the topic of buying term and investing the rest, because you sound like you may be someone who's familiar with Dave Ramsey or Sue Zorman. which is why I kind of come off fast the way I do, because I hear that in a lot of the speaking of people when they're going towards these investments and things. And the problem is this: you're still paying fees to these companies, whereas they're telling you buy term and invest the rest because a life insurance agent can get 90% commission, but they're charging you 2 and 20 fees, so they're taking 20% of your stuff every year for no reason. Unless you have unless you're already at that $250,000, then it doesn't make sense. But a flip side of that is, like I was explaining with a compound life insurance, right? That's already tied to the S&P 500 versus something like Tesla that's just going to the S&P 500 that's worth what, $1,700? Whereas you're looking at the S&P 500 as a whole, and your life policy will mirror that. So it'll grow at, currently it's a 6.4% interest rate due to the prime market, or 4.27% interest rate if the market drops, where you're still going to get guaranteed growth. Now that's different from a variable universal life insurance. Okay? So again, when we're talking about life insurance, you only get taught 2 things: permanent or term and whole life. But again, Chaos, we just looked at the beginning. Unfortunately, madam, you weren't there at the beginning, but hopefully Chaos can put this up in the chat again. The bank put in 2019 $3 billion into the stock market. Sounds great until you realize that they put $22.5 billion, almost $20 billion more, into cash value life insurance. So we'll tell you, well, what's so hot about cash value life insurance that the banks are willing to put $20 billion more into that than into the stock market? So when we say buy term and invest the rest, Dave Ramsey, Sue Zorman, they want you to buy term and invest in a stock portfolio or a mutual fund. Or if I'm just going to say the company Prime America. Great company, by the way, if you're into MLM. Personally, I don't use them. A company that was with them, MetLife, got in trouble and is no longer MetLife Investors. They're now Bright House Financial, just like Citibank.
Well, I know someone that did MetLife years ago. I didn't know. They got in trouble?
Yeah, MetLife Investors got in trouble for being in bed with Prime America.
Oh.
So, yeah. Now, there's nothing wrong with Prime America. Don't let – see, there's a lot of financial professionals who bash that company, including me. But I'm not going to do that because there are some good people who work in those companies. And those good people are trying to make a good difference in average Americans' life. Now, the difficulty is I know a lot of those good people who ended up having to leave because you couldn't really do a proper job for your clientele. Okay? So, like I said, here's the problem, right? Like, you asked my credentials. And I don't have a problem with that. People do that all the time. But then you'll turn around and buy a stock from a guy who's not licensed at all and be like, oh, well, he said to buy this. Now you have no recourse against him. For example, like I said, when I first came on here, I got sued for $1 million for no reason other than the woman didn't tell me the truth about her policy, and I lost, right? But that's the recourse that you have against that licensed professional, which is why I'm glad you asked my credentials. Because now if I tell you to go buy a stock and you go buy a stock, you can actually sue me if you got harmed from it, which is why I always put the disclaimer, here's what I buy. We haven't sat down together. I'm not going to tell you what to buy. But also, the buy term and invest the rest, a cash value life insurance policy grows faster than your bank. So your bank has currently 0.0% APR in regular banks. You have to get a money market account or a high interest bank account, which the highest I've seen was American Express, 1.67% APR, right? Where on the flip side, a life policy, worst case scenario, grows at compound interest rate 2%. So you're talking about all these other investments and stuff that don't even, if you did the math at 3% a month, that's 36% a year. Show me any stock that does that.
Well, they gonna make, if they sell on that Gamestop, if they got it in at $20 up to $300, they gonna do pretty good.
You know what? I hope you took advantage.
No, I didn't know about it really, and so until it was too late, to be honest, or toward the tail end, and then they stopped it. So, but I know they were on because I joined Reddit just to read all that stuff they were putting in there, and some they said I paid $40,000 of my student loan off.
Wow.
That's like, thank you, and I mean, the comments are interesting. But anyway, there was something you said that I want to just ask about really briefly. And I know there are all different types are annuities, and I know people have gotten in trouble.
Oh my God, I love you.
Buying annuities and with these commissions and not being able to get out of them. So
I love you. So I need EKG. Go ahead. I'm at the hospital, guys. So.
Oh, really?
Yes,
Are you okay?
I have pancreatitis at the moment.
Oh, I'm so sorry to hear that.
Such is life. I should have known better.
Well, we all should have known better, but, we deal with what is, right?
So annuities, I am so happy you mentioned that. Like I was actually telling Chaos, September of last year and November of last year, I did $122,000 worth of annuities. Because I prefer selling annuities over life insurance. They're a lot easier. You don't have to qualify for them. And here's the beauty. Here's what I like to teach folks. Why are you wasting your money on a 401k? Right? A 401k pays out what's called period certain. So let's say you balloon $1 million in the 401k, and they're going to give you $100,000 a year for 10 years. After that, it's done. Right? But the annuity is a pension, just like a mortgage, which means payment till death. So let's say you build up $1 million in that annuity, and they're paying you $100,000 a year for 10 years. That $1 million is gone. But they're still going to pay you $100,000 a year out of that annuity until the day you die, because it's a pension. Now, when you're looking at annuities, there are a boatload of different types of annuities, and it really depends on the state that you are in. New York State is terrible for annuities. However, the state of Connecticut is wonderful for annuities because they have indexed annuities that are indexing the S&P 500 again. But it really depends on the state that you're in. I hope that answers the question, son.
Yeah, and there's variable annuities. There's all different kinds, right?
Yes, there's index, there's variable, there's fixed. If you're going to get with an annuity, if you're going to do anything variable, go straight to the stock market. Don't waste your time doing a variable annuity. For an insurance product, do a fixed product. If you want the volatility, go directly to where there are going to be volatile things, because you're going to get much more of a reward. It's too safe of a product to go into something that's volatile with an annuity. You wouldn't even, you'd be mad at the gain. It'd be like 1%. Whereas, you can get 4% or something in a market. So when you're looking at a variable, I would never recommend a variable annuity. But I would recommend it.
Recommended that to me years ago, and I'm like, And then I went to some kind of seminar. This man he did annuities, and he was like, you better be careful before you pick an annuity. You better know exactly what you're getting into.
You also want to know what you're pouring into it. What I recommend generally, so here we're going to talk about retirement right now with life insurance, because like I said, I can show you how to use life insurance to do everything. Buy a house, buy a car, pay for your kids' college, and do your retirement. Now, it's much better when you're younger to get the policies, because, again, just like if you're saving up money, if you want to save up that $250,000 in that FDIC account, well, it's better if you start at 25 than at 50. Saving $20 a month. But if you start younger and you buy a life policy, a cash value life policy, you actually have the option to do what's called a 1031. I'm talking about real estate now. I'm also licensed in real estate, so and I have my PTIN, which is my tax preparer's identification number. So all of these, I have more credentials than your average bear.
But that's good, though. That's good.
It is and it isn't, because some people feel, oh, jack of all trades, master of none, but I'm like, they're all the exact same thing.
Yeah.
But when you're looking at that cash value life policy, so you build that up over the course of 10, 20, 30, 40 years. Now you've got all this cash in this policy and you haven't died. So what do you do with it? Well, you cash it out. And you do a 1035 exchange so you don't pay taxes on it. And then you roll it over into an annuity, a single premium immediate annuity. So there's deferred annuities, immediate annuities, indexed annuities, variable annuities, fixed annuities, all types. Again,
the only
then you're looking
thing is with the 401k, you can do a Roth, and then you
that's an IRA. That would be an annuity as well.
Oh, you can do a Roth 401k within an annuity?
You can do a Roth IRA, which is an annuity.
Well, like with those employer-sponsored 401ks, sometimes they contribute fee to
you're
your
talking
401k.
about an SEP plan.
Yeah, and then it lowers your taxable amount. Like if you put money in. Yeah.
That is incorrect. So what they do is they take pre-tax dollars. However, what happens is when it annuitizes, you have to pay taxes on that as if it's earned income, not capital gains. So let's say you're in a 33% tax bracket and in 20 years you retire. You want to pay only 15%, but because you paid it Roth or before you got taxed on that money, you have to pay actual tax, income tax, not capital gains. Now, on the flip side, if you do an IRA privately, you get taxed on that money, right? And then it's in your paycheck. And then you put $5,500 if you're 50. I'm sorry, $6,000 a year if you're 50 for a catch-up provision into that annuity with dollars out of your own pocket that you've already been taxed on. That's a tax write-off. And that actually lowers your taxable income. But again, we get taught this stuff because they want you to pay the fees. Right? Everything I told you is to avoid you paying fees. Everything they're doing, you're going to pay fees. A 401k is great. Never get out of your 401k if you have it, especially if your employer matches. But you want to maximize it by doing something privately. I'll give you an example. The MTA, Metropolitan Transit Authority. I have a lot of clients from there. Again, I'm based out in New York. A lot of them who are at 2 Broadway or 2 Metro Tech, if anybody's familiar with New York City, those are the corporate offices. And they, even though you have all these great pension plans for MTA employees, the corporate office, when I was with Mutual of Omaha, all came and bought private retirement accounts from me, separate from what? The Metropolitan Transit Authority, which is a great company, and they give great retirement benefits.
But they do.
Oh, what's up, brother?
Yeah, we get blood work from you.
You got to get blood work? Yeah. All right. How you been?
Cool, man, you know.
I'm sorry, y'all. I got the doctor coming to take blood. This is actually a brother I went to high school with.
I'm a doctor for
Yes, this brother I went to high school with. So I was like, oh, my gosh. Crazy. Small world.
It's a small world.
Yeah. So you definitely want to, look at that. But what the main thing is buying term and investing the rest. And it shouldn't be those investment products because those are going to be 2 and 20 fees. Whereas if you just put it in a life policy, you're not paying me any fees. You know what you're paying? You're paying your premium. And if we set it up to overfund, which is generally what I do, you're going to get more of the benefit. You see, people will do a life insurance policy or a cash value and look for the death benefit as if that's what it's for. I did some videos where I've shown how life insurance actually, if you get the proper cash value policy, pays you for having it after about 10 years. So when you build up cash value, right, let's say you paid $24,000 over the course of 10 years or $2,400 a month, right? I'm sorry, $2,400 a year over the course of 10 years, $2,400 a year, $24,000. But
that's
your
like,
cash value.
How much is that a month? That's
it's about $200. $200
$200 a month over, you said, 10 years. Okay. And then what?
So, yep. Now, your cash value accumulation or your cash surrender value may be $27,000. So you paid $24,000, but if you cancel the policy, they give you $3,000 additional dollars. Again, these aren't exact. Sorry, go ahead.
You said if the person cancels their policy, they get $3,000. Oh, I see. I got you.
You get the whole $27,000, which would mean that they paid you $3,000 for having a life policy.
Okay.
Okay. But again, it's not taught to us that way. It's taught to us, hey, here's a death benefit. Oh, that costs a lot for $1 million of death benefit. Well, yeah, it does, but you're not going to get a life insurance policy for the purpose of dying. That's what you get the term policy.
But like some ETFs have been doing 15 to 20%, some more over the past couple of years. Some have done 30%, I think.
Right.
So.
But your average investment over the term.
So it's like, okay, I can do the life insurance policy, or I could just do all this investing. But I guess you're going to have to pay capital gains taxes on it. So
again, with the fees, right? You're proving my point here, because you're like, well, I could do this cash value life insurance policy, get all this cash, pay zero fees, get all this additional money, and if something happens to me, my next of kin get it. Flip side, if I do the investments, I got to pay 2 and 20 fees. I got to pay these taxes. Also, if I die, my beneficiary doesn't get anything, because you can't bequeath stock unless it's in a trust. It has to be sold out. So whatever is sold at that time is what your next of kin would get.
Yeah, I'm glad, seeing the pros and cons. You see what I'm saying?
Yeah.
This is good. To enumerate.
Again, right now, though.
What if you don't have children to leave it to, or grandchildren? And, your parents will be dead. And because there's a lot of people that are single, and some don't have children. So what would you say to this?
So you're looking at leaving a death benefit. I'm not looking at leaving a death benefit. I'm looking at building cash for myself. So it's an investment. You're buying term, and you're investing in a policy that is going to build cash. It's difficult to explain. It's more visual. You and I would actually have to have a consult, because we'd actually have to have a consult for me to actually break this down and show you the numbers. If you look at my YouTube page, though, I don't know if that video is hidden, but I show you how a traditional IRA is more tax favorable than a traditional investment or a Roth IRA. And I literally show you that with graphs. All of these things, like I said, I got rid of my licenses that can lose you money, because all that happens is a lot of these other credentials. Remember when you said your friend lost $10,000? So
she was working and saving and not, spending money, and, she saved that money up to do options, and she, this was probably at least 23 years ago, and she came in, I had never seen her like that. She had been crying and crying. Her eyes was red, and she had circles, and she was wiped out, literally. She just stayed at the desk, and she couldn't go out and do.
So the advisor that did that to her did something terrible. He didn't do what's called check her risk tolerance.
It was her sister who they had a family investment club and stuff, and her sister was an accountant in New York, and she made her quite a bit of money though in the stock market. She was on point, but she lost that $10,000. I'm like, ooh, Lord.
Yeah. So what that is risk tolerance. So when I would sit down with you, we would go over your risk tolerance to see, okay, madam, if you invested with me today $20,000, and tomorrow that $20,000 went to zero, how would you deal with that? Okay.
Oh, no. I wouldn't be happy about it.
Okay, so then I'm
not a millionaire. You know what I'm saying? Nobody on this phone is. Okay.
Right.
On this.
So what the investment world would tell you is then you should not be investing. Okay. When I was a stockbroker at a company called E.J. Sterling, which is on 39 Broadway. There are a bunch of 21-year-old kids who were the stockbrokers, just like myself. I was old at 27. But these 21-year-old kids are charging a $10,000 flat fee commission as a first investment. So when you come and invest with me as an accredited investor, I'll say, look, I'll gain your trust. I'll only charge you $10,000 of a commission, plus whatever else you're investing. So if you don't have the ability to lose that, then they would tell you, don't invest with me. This is the beauty of those apps that I like, because they allow regular people like you and me to try and get into the stock market. Now, the stock market is not about gaining wealth. It's about preservation of capital. So when Warren Buffett goes in, and I know you said there's ETFs who give, 15, 20%, those are flukes. Your average return on investment over the course of 20 years is 10%. This is evidenced by the stock market since 1930 till 2030. Stuff does fluctuate more and less, and yes, you'll have those outliers. But the average rate of return is 10% over the course of 20 years. Not higher, not less.
Per year, which is a whole lot better than putting it in the bank in a savings, which you're going to be.
You ain't getting nothing in the savings.
Oh, they're going to take fees out. You're going to be minus. Okay.
Yeah. You're getting nothing in the savings. You're getting, like you said, they're going to beat you in the head with fees. And, yeah, no, it's way better than the savings.
Yeah. And if you're young enough and start young enough and, you put $100 a month in, you'll be fine. If you start at 22, 23.
Hold on, wait. Say that one more time for the people in the back.
You'll be fine.
You hear that?
Now
you might she said start at 21, 22.
You might have to stay at home, stay living with your mama and not going out and getting your first apartment so you can have chicks coming over at night and smoking your weed and all that stuff.
What's going on here? Hold on. I'm listening. What's going on here?
And save your money and save your money and
yes.
And be smart about it.
Yeah.
You shouldn't go out and buy you some Yeezys or, the new Michael Jordans and, gold chain and a Louis Vuitton purse.
Mm-hmm. Well, here's what I tell people. I tell people, listen, because in my world, I'm a label whore. I wear Michael Kors suits, right? They're not cheap. They're $600 a pop, which is actually cheap for suits. Brooks Brothers are $1,000. So, but
I think they closed some of those Brooks Brothers stores down.
Yeah.
Those border.
I ain't got it like that to afford Brooks Brothers yet.
Go
ahead.
I mean, I hear you, but I'm just being tongue in cheek. You know how and when I was younger, I spent money on stuff I didn't really need to spend it on. I should have been investing back in the IT stocks when they were real cheap. You see what I'm saying?
Mm-hmm.
So you live life, and if you don't have direction, you don't have people to mentor or tell you or advise you, then you do what you do,
Exactly.
So you get the information however you might seek it out. Someone might tap you on the shoulder, or you might overhear something. So, and then which might spark your curiosity to go learn more. But, now the times we're living in is too unstable. And there's a whole, the energy is different. It's just not the same. And people have to be a lot more wiser. And I would tell any young person, if you can move back home, if it's doable and save money, I would do it. I would do that.
Now, before we go on, Ms. Lake, you've been online for a while, and I want to move on with the conversation. I'm gonna put you in the back chat. Before you go,
thank you. And I'm gonna check you out. on your website. Okay.
One thing before you leave, Miss Lady. What you said, I follow you, I get you, but with a lot of spaces, when certain men listen to that, they'll find an issue with that because they feel with most children that's coddling, having to come back home and do such a thing. But my thing is this.
There's millionaires that did. There's an IT millionaire.
I get you.
I mean, come on. I'm talking about saving money and investing for your future. It's not about coddling. It's about being smart.
Well, my thing is this, because I don't advocate. I mean, I'm going to say this personally. If any time, and I want parents to understand that have kids that have gone to school, did what's right, and they fall on hard times, there has to be a strategy on what you're about to do, period. Most of us today in the black community, we don't have really a strategy how we're going to really amend some form of wealth or better put ourselves in a better position so we'll be fine no matter the circumstance. I think that is the best message to move forward. But you see, with the problem with a lot of space, because we're not there and we're not really structured right now as parents, even with our children, that the best bet, because a lot of millennials on the average, and I can say Gen Zs too, that a lot of them are going to eventually have to go back home. Is it right? That depends. Is it wrong? I can't say yes or no. Because at the end of the day, if you're out in the environment, you have to see what you could accumulate and accomplish. Now, if you're a man that went to school, got the debt, can't find a job, then the second best thing is you're going to have to go to an environment or back to some form of nest for now and plan out a strategy. If your mother, like say Miss Lady, if you're able to plan out your son's strategy, how to go about it and help him, then okay, that'll be good. But the average parent today is not thinking like that. So what happens with that type of rhetoric, people are just going to procrastinate more and nothing is accomplished. Yeah, they could probably make some money and save up something, but really to be more effective in this economy, in this technical age, man, you need a strategy. Because save money today is not going to be enough. You got to plan out how you're going to be able to operate in this new environment properly. And if you could lay out and follow through, that will be a better message and better effective move forward. Because I tell you right now, in the community, we get very complacent easily once we're comfortable. And usually what breaks comfort is you have to put in harsh environments out in that world. And that's to force a man to really produce something. Either you get eaten by the wolves like everything else. Hell, Alonzo, you were on the streets years ago, and you see how hard it was where you almost lost your life. God willing, you survived that, and you had to go back home. But the difference is how you were thinking, you were already thinking in a hustle mindset. So obviously you had a plan of action. The average boy today that's not about the life doesn't really have a real strategy plan how he's going to maneuver his life. So when I lay out a message and point out that is different from us, from them. Non-black people, Caucasian people, they already got the wealth already sealed up in this economy, in this American social order.
But not all of them.
Hold on, let me finish. Let me finish. The reason I say is because they could have the luxury to do that. We as a community, a race of people, don't have that luxury. So whatever we do, especially when you deal with men, boys that are men, you got a strategy and plan it out and execute. Because you don't have the same authority like your non-black counterpart. So that's a good strategy if you lay out how you're going to go that route. But if you just sit there to save money, it will not. I think it's going to lead complacency. It's going to lead to complacency in my view.
But that falls back on that individual person. If he doesn't have enough get up and understand he's a black man in this country that is against him, and he needs to have strategy, he needs to be smart, he needs to save money, learn how to invest money appropriately, then that's on him. I mean, if you have to be thrown out to the wolves to finally get it, oh well.
Madam, I'd agree with that, but I see way too many brothers who are the otherwise. In our personal lives, we've seen way too many brothers who seem to be complacent and happy. Now, like you said, it is on the individual, but Chaos, I want to push back because in agreement with her, I think as men, we have to kind of foster that too, right? Like when I was coming up, the OGs taught me to, listen, son, we're going to run the street and we're going to do this and we're going to wear jeans that are too big and falling off and, we got to buy Mercedes-Benzes and all this other stuff. Nobody taught me, hey, get a regular job, be an accountant. Nobody was trying to teach me that. So in that sense, right, being a responsible man was boring to me. That's why I wanted to run the street until I realized, wow, these 5 bullets don't tickle. Let me go do something productive. Now, the young brothers I speak to, because I go to neighborhoods, like I said, now I live in Connecticut, but I used to live in East New York, Brooklyn. It's a very tough neighborhood. Brownsville, Brooklyn, a very tough neighborhood. And Bed-Stuy, Brooklyn, a very tough neighborhood. All 3 of those neighborhoods, when I used to go see these young brothers at the corner store, right? I walk in the corner store first thing, I got that this, I got that drugs, I don't want your drugs, you idiot. Get the freak away from me. But I'd turn around and say, hey, you guys work for yourself like me. Why don't you do insurance or real estate? Because real estate is just as competitive as you guys selling drugs out here. There's 400 people trying to sell one house. Are you the guy who convinced me? And so I think those guys get complacent. Right? I've spoken to some of them, and they're like, oh, I'm the best salesman ever. And I'm like, no. You see, if you're selling drugs, you're not a salesman. Nobody needs to be convinced to buy that bag of cocaine. They're just going to go buy it. Nobody, but you need to be convinced. Very, very similar. Prime example. No one's going to say, what's your credentials for selling cocaine? Whereas this young lady, and not that it was diminished or not that it was a bad thing, but she rightfully so. Well, what are your credentials as a financial advisor? Right?
Yeah.
So we have to teach these young brothers, look, stop being complacent and being an idiot. A basketball and a gun are not the only things that are available to you, especially with the fact that less people make it in sports, right? There's 3,000 plus collegiate sports teams. There's 32 professional sports teams. So there's 3,000 jobs versus 3,000 teams with at least 16 people if it's basketball, at least 55 people if it's football. There's only 3,000 jobs in the NFL, MLB, or NBA at any given time. So we have to, but guess what? There's way more accountants, way more in Manhattan, New York, there's 12,000 real estate agents and 11,000 deals done a year. That means 1,000 agents don't get a deal done, let alone the fact that most agents are doing multiple deals. So we got to step our game up.
Yeah, okay. I agree with that. Like I said, a lot of things that present to us in regards to alternatives to be able to function in the society besides trying to make it, hit it big, hit the home run. What I mean by this, trying to make it into the entertainment business, music, comedy, acting, and in the sports industries, i.e. football, basketball. I can't say baseball because most black people, they play baseball, but not like that decades ago. Yeah. So the top sports right now is basketball and football. So I will hold you on that, Alonzo. Moving on, is anything else during your dissertation that you want to lay out?
No, I'm pretty much done. Like I said, buy term, invest the rest. Just buy a term policy and invest the rest in a cash value life. If you want to avoid all those fees and really make some money.
All right. Let me give the call number for any feudal, or I would say any other questions people want to ask Alonzo Hall, a.k.a. the Blue Baser. The call number right now is 712-770-4160. The access code is 977-194#. I repeat, 712-770-4160. Access code 977-194#. Tonight's stream presents Chaos8Reign presents Insurances. Are you protected? With special guest Alonzo Hall. The one thing that I want to ask, in regards to your journey, to what you're trying to accomplish long term, what things that you expect at yourself now, because you've been putting out content now for the last, year, maybe? I can't remember how long you've been doing
really.
this. No?
As far as YouTube, yeah, I mean, maybe about the last year I've been putting out content. To be honest, it's just to reach people. I really just started going on YouTube because I was doing a bunch of Facebook stuff. And my buddy was like, well, if you put this on YouTube, it can be seen by multiple eyes, and, people might not see it that day, but they can come and see it, 4 years from now. And I was like, oh, okay. I actually started that years before with a different channel, and it got less traction. But I realized that, like you said, me being a young black man, living the life I've lived, and turning into 25 cents, I realized that there are a bunch of young black dudes who think that that's the way to go, and that think that, where you and I are now as, businessmen living regular lives is boring, right? But here's the cool thing. If I can teach them, hey, bro, the cool thing about this is, here you'll still have money, whereas there you won't, or even worse, because now there's anti-money laundering. 2002, the Colombian cocaine cartel had $80 million of drug money in life insurance policy. It's a New York Times article. You can Google it. The Colombian cocaine cartel had $80 million in life insurance. So again, it's a financial. If legally a life insurance policy is the best thing going, technically, if I could legally call it, I'd call it a wealth contract, because life insurance just pays. If you die, it pays a death benefit. If you live, it builds cash value. If you want to retire, it can help you do that. If you want to buy a house, it can help you do that. You want to buy a car, it can help you do that. You want to send your kids to college, it can help you do that. Versus paying additional fees for a Section 529 college savings plan. Trust me, I don't mind selling it to you as a financial advisor because I get a higher commission. I get a better commission. I get 220 fees off of you for doing a 529. Right? But I'm an actual fiduciary. So unfortunately, what these other financial advisors are doing is not being a fiduciary. They're looking at what's best for their pocket. Well, no, that's not true. They're looking at what's best for their client. Sometimes your client paying 220 fees is a good thing. Some clients can afford to pay those 220 fees. And there are interest percentages that you're going to get above a fixed product. That makes sense. However, you have to sit down with that person. I've had so many people, I'm going to sit down and look at your little life insurance options. That makes no sense. You're diminishing something that if I was to tell you, I'm going to sit down and look at your little custom Mercedes-Benz. Like, you see what I'm saying? People, well, how much is a life policy? How much is a Mercedes-Benz? Well, that depends. Are you getting a C class? Are you getting an A class? Are you getting an E class? Are you getting a Maybach? Are you getting a G series? Well, each one of those costs a little different, but they all have a Mercedes-Benz logo. But there's different bells and whistles. So that's it for me.
Okay. And I guess no one else has any other questions. This was very good. I think this clears the airway for a lot of things that's going on in regards to people trading stocks. I think this gives more of an educational piece for a lot of people that will re-listen to this broadcast. And how you present your yourself was very good, Alonzo. Like I said, for people that will get in touch with you, where people can find you, Blue Blazer?
Yes, you can find me across most all platforms as Alonzo Hall. You can find me on my firm, cgwealth.financial. My Instagram is ADH for Alonzo D. Hall, Wealth Solutions. My Facebook is facebook.com/adhallcall. I'll actually put all this in the chat because it's a lot of stuff.
Yeah, don't worry about it. I got you covered. This will be in the description on my channel. So if people want more information. I will leave it in the description, including all links and the website as well for consultation. And I recommend most people, if you are a person, especially a young black man that's under the age of 30, you should come seek Alonzo Hall or any other insurance consultant to try to get some form of insurance. I wish I knew this. Well, did I really know this back then? I probably might have known this when I was around my 20s, but that was like a decade or two ago, if I can't remember. But, I never took the opportunity at that time. But now thinking back, because the age is very much important, the type of policy you will qualify. I say personally, if the man, what you're doing, young man or young woman, if you are in the 20 range and you do have a job, I would recommend try to seek it now and get it for a real cheap price. Because let's be honest with you, no matter if you still employed or unemployed, it will be better for you to get it, And then trust me, it's smarter down the line, because to start paying out around your 20s and let's say in your 40s, you're going to see a very heavy portfolio amount of money you accumulate for the first 20 years. And even greater if you accumulate in the first 30 years. So, like I said, check Alonzo Hall out yourself. Those links and information will be in the description at the end of this type of stream. Thank you, Alonzo Hall, Blue Blazer. We might do this again soon. If you have anything new or anything that you want to share, just hit me up. I've got make a schedule, make it happen. I learn a lot, and I think a lot of people.
Next time we'll talk about cars and houses.
Oh yeah, yes, yeah, oh yeah, perfect. That was perfect. Like I said, you know where to contact me. So I'm gonna let you get back, rest up. Take care, brother, and thank you again.
Thank you, brother.
All right.
Peace.
Yeah, peace. And I want to thank everybody else that listened into today's stream. If you're not familiar with Chaos8Reign, you'll find me on YouTube. Hit the red button. Hit that top bell. That nice little ringy bell. Ding! Hit that top bell so you know when there's an upload. And there's what we call it when I go live on Chaos8Reign channel. Also, I like you to and hear from you from Twitter. You can find me at Chaos8Reign7. I'm not active as I usually be, but if you tweet me or follow me, it will be appreciated. I'm going to be more active, posting certain content on Twitter as well. You could also add me on the Facebook called Erick Reign for the Chaos8Reign channel personally. If you want to chat or have any ideas of a show, or let's say you just want questions. If I can answer it. You could also hit me up on Facebook as well. And what else I have here? Let me find my list. And season 2 is going to be soon put on all forms of podcasting, Anchor, Spotify, etc. So be on the lookout for that. All the shows will be converted in audio, so you could sit back and listen to it while as you drive, as you're relaxing. Some of the more important shows I put up there as well. So I have content. Rather the quality, the sound is very good, and it's improving as I speak with more equipment I have around. But like I said, I have a plethora of or a catalog of episodes that I have put out. So for those that want to find or know about me, it's there now. So I'm not a small little content creator. I've been doing this for a few years. The only thing different is now for the past year and a half or two is I have expanded, where my content is now. So like I said, Chaos8Reign is out there, so you'll find it. Just Google me. But other than that, thank you for listening to today's broadcast. Be on the lookout for the next broadcast. I think I'm gonna keep pushing forward because I cover this side of the money side in regards to insurance. So I'm probably covering more of the economic side in future shows. So be on the lookout and tune in. But other than that, thank you for listening. Until next time, take care and good night. Thank you again for listening to this stream. I'd like to thank the Blue Blazer, aka Alonzo Hall, as my guest on this stream.
To follow him, the links will be in the description of this stream. And like always, comment, subscribe, and like this video. You can also follow me on Twitter at Chaos8Reign7, and you can follow me now on Facebook, Erick Reign. Thank you again. Until next time, let the chaos reign.